Candlestick is one of the basics and the most important factors to consider when trading any crypto asset in an exchange. Knowing the right candlestick and the meaning of all candlestick can help you determine the next price action of every currency. This is Smart, and in this video I'm going to be taking you on how you can read candlestick, the meaning of each candlestick, and also how you can win every trade with candlestick. So this video will show you how you can use the candlestick to make a lot of winnings, a lot of money for your trade. So you will want to stay tuned to the end of this video, as I have a lot of things to share with us. Once again, thank you guys for the new subscribers. I can see you guys. I love you guys. Thank you for subscribing. For those that are just watching this channel, this is a channel, educative channel on how to make money online via cryptocurrency, affiliate marketing, networking, and so on. So if you know this is the right channel for you, kindly click on that subscribe button. Stay tuned to the end of this video. Click the notification bell so you can get notified whenever I drop another educative video. This is the green and the red candle. That is the bullish and the bearish candle. The bullish candle signifies when the price of the currency or the commodity is moving up. Then when you check your chart, you can see the candles forming green, moving in the upward direction to show you that the price of the currency is going up as we have more traders buying that particular currency. But when you see the value, when you see the candle chart and you see the red candles, that is the bearish candles, that shows that the sellers in that market are dominating the market. The sellers are the one currently dominating the market, and they will be bringing the price of that currency down. Now, identifying the candles, knowing which one, the names of all the candles, the opening price of the candles, the highest price, the lower price, you being able to identify this will help you improve your strength and your knowledge when trading. So I'm going to use this as an example for you. And one thing I need you to know, the opening price of the green candle, of the bullish candle, is always at this point right now at the bottom, while the opening price of the bearish candle is always at the top right now, right here. So after this, I'm going to take you to the trading view or Binance, whereby you can see some of this example. Now, looking at this candle, I mean the bullish candle, I'm going to explain what happened in this market for you. So one thing about reading candle is you can be able to read, analyze, and predict what is happening in the market. So I'm going to tell you what happened in this market right now with this candle. Now, this is the opening price of this candle. You can see the opening price where I put my arrow. So at the first phase of this candle, we have more sellers. So the sellers are the one that push the price down to this lower price. They push the price down to this lower price and make this candle to form this lower wick. So after pushing the price down to this lower price right now, the market stop, and we have buyers coming into the market. And before I proceed, I want you to remember something. Each candles have a time frame. They have a time frame which they signify. They have a time frame, and this might be a 15-minute candle. It can be a 5-minute candle. It can be a 1-minute candle. But let's take this as example, as we are using a 15-minute candle. And on my previous video where I explained about how to trade, remember I said something about time frame, that each candles will form within that time frame. If this is a 15-minute candle, that means this whole candle we are seeing here form within that 15 minutes. And if it is a 5-minute candle, it means this whole candle we are seeing here form within that 5 minutes. If you didn't get this, you have to watch the previous video I made on how to trade future. I explained pretty well and very well on this candle time frame. So this is it. Like I said, the opening price is at this point where the sellers push the price down to this lower price. Now, after the seller push the price down to this lower price, then we have more buyers coming into the trade, and the buyers push the candle, push the price up. They keep pushing the price up. So getting to this opening price is going to form a wick to show that yes, the lower price was this, and the buyers started pushing the price up, and when it gets to this opening price, you are going to see a lower wick here to show you that okay, this is a wick that was formed when the price action was down. So now the buyers keep moving the price up until it gets to this highest price here, So after getting to this highest price here, now we can see that in this candle time frame, the buyers are the one dominating the market. So after they push it to this highest price here, then we have sellers coming in. So the sellers keep pushing the price down, keep pushing the price down, keep pushing the price down. So the sellers were able to push the price down to this closing price, because this is a closing price, because this is where this is the last action of the candles at that time frame of that particular candle. So let's say this is a 15 minutes candle, and getting to this highest price here, maybe the candles has already used like 14 minutes. So by the time the sellers push the price down to this price, it has elapsed its 15 minutes. So the candle for that particular time frame is going to close. So that is why we have the closing price at this particular place. This is the closing price. Now let's consider this red candle as the next candle after this green candle. So this is the closing price of this particular candle, and whenever another candle wants to open, the other candle will start from the closing price. So since we have the closing price of this candle at this point right now, that means this next candle, which is the red candle, will start its own opening price at the closing price of the previous candle. So this is very simple. The next candle will start its own opening price at the previous price of the next candle. So this is the red candle. We take the bearish candle as the next candle forming, and this is also a 15 minutes candle. So it starts its own opening price here. So after starting its own opening price, the buyers keep on dominating the market, and they push the price up right now to this highest price. They push the price up to this highest price. So after pushing the price up to this higher price, then we have a lot of sellers coming into the market, and the sellers push the price down to this opening price, and this left us with the upper wick we have here. This left us with this upper wick. After the sellers push the price down to this opening price, the sellers keep on pushing the price down until they get to this point right here. Let me move this over here. Until they get to this point right here. So they didn't stop. They keep on pushing the price until they get to this place, which is the lower price. So after pushing the price to this point right now, then we have some sellers coming into the market. So let's assume that getting to this lower price right now, they are already at 14.5 minutes, and this is a 15 minutes candle. So the buyers also do not want to accept the fee. So we have more buyers in the market, and the buyers push the price to this limit, which is the closing price. So on getting to this closing price, then the time frame elapses, the 15 minutes elapses. So this now happens to be the closing price of this particular candle. Then another candle will form starting from this closing price upward. So the other candle opening price will be at this closing price. So right now, I believe with this explanation, we have been able to capture one or two things. So right now, let me take you to the trading view, and let us look at the real life example. So this is trading view for us to see. This is the Bitcoin USDT chart, live chart. You can also get this on your Binance. It is the same thing. So now let's take one candle as an example. Let's look at a candle. So let's see the one that has both upper wick and lower wick, so you can get, okay, we can use this candle. Okay, this is a perfect example. So now let's see, if you look at this candle right now, let me use this arrow once again. So if you look at this candle right now, I'm talking about this particular one. Let me draw the arrow. Yeah, this. Okay, so this is the opening price of the candle, because I'm using this candle for example, so we will have to ignore the one beside it. So this is the opening price of the candle. At the start of this candle, the opening price, we have sellers pushing the price of this candle to this point here. I mean this point here. Okay, let me draw it like this. This point here. The points here, this point here. So this point here, which form the lower wick. So this is the sellers push the price down to this point here. So after the sellers pushing the price down to this point here, so we have buyers. The buyers come into this trade and start buying BTC up. And don't forget, this is a 15-minute time frame. So every candle has 15 minutes to read, and I'm also going to show you that. So after the seller push the price down here, the buyers start pushing the price up until they push the price up to this highest price here. This is the highest price here. This wick here is the highest price. You can consider this with the last images I just showed you. So this is the upper price here, and don't forget what we have is the body. You can see the body here. This is the body. Okay, This is the body here. This is the body here, the entire body. So they push the price to the upper wick. So after pushing the price to the upper wick, then we have another sellers in the market, and the sellers push the price to this point here where we have the closing price. So let me cancel all this so we can see. So like we know, I said this is the opening price of this particular candle, and this is the closing price of the candle. Remember what I said, that wherever the candle closes, the new candle will start its own journey, its own opening price from it. So this next candle that formed after this candle, you can see its opening price here. And after its opening price, you can see that the seller also pushed the price down here. After the seller pushed the price down to this lower wick here, then we have the buyers that push the price in the upward distance to form the upper wick there. So that is it on that. And you can see after that we have the next candle forming, This is also same thing as the green candle, as the red candle, which is the bearish candle. And like what I explained to you, that when we have the bearish candle, the price will keep on falling down, and when we have the green candle, the price will keep on moving up. So this is very simple, straight and easy. If you have any question or anything, you can put it in the comment section below. And also, let's give ourselves this grace. I want everyone to go to this comment section below and put it there, the next video you want me to make, the next information you want me to pass. If you have any video, any trade or anything you want me to explain in our next video, any topic you want me to discuss on the next video, kindly put it on the comment section below. Now let me show you the time frame, how you can check the time of every candle. I can stay here with you until the end of this candle. This is the current candle that is currently forming. Let me use this arrow to show you. This is the current candle that is forming. You can see, and you can see that here you can see a time reading. Watch here. You can see this is 3 minutes counting down. So it's because we are on 15 minutes chart. And you can see the time reading down to show you that once it has reached 00, that means the 15 minutes has elapses, another candle is going to form. So I don't know, let me see if I can change this time frame to a lower time frame so that you can pick and get how this thing is working. So let me change this to Alright, so I've changed the time frame to 1 minute time frame, and this, you can see this here. Let me show you. So you can see here, you can see I've changed this to 1 minute. This is 1 minute here, 1 minute. And also you can see in this 1 minute chart, you can see that the red candle is the one currently forming. This is the candle that is currently forming, and you can see the time reading at 16 seconds, 15 seconds. So we are going to wait. You can see it is now moving up. The buyers are now dominating the market. You can see this is 10, 9. Immediately it reaches 0, you will see that another candle is going to form at the closing price of this particular candle. So 3, 2, 1, 0. Then next, you see we have another candle forming. So that is just it. So that is it, guys. On our next video, I'm going to be taking you on support and resistance in a candle. So support and resistance will allow you to know, if you know the meaning of support and resistance, it's going to allow you to know the next price action, and it's going to help you predict the next movement of a current price and a current trade. So this is going to help your trading ability. So like I said, please guys, if you are yet to subscribe to this channel, kindly subscribe, give some thumbs up. This is what is going to encourage me to do more of this video. So help me grow, and also share this video to people. Make sure you give some thumbs up, subscribe, and we'll meet again next time. Bye for now.